Well, congratulations. Maybe we're done with snow for the year. Welcome to May 2021 and the Colorado Springs Real Estate Market Report. I'm Ben. I'll be your host on this tour through the speed of the marketplace. Let me ask you a quick question. If you were to drive down a crowded interstate at 100 miles an hour, what would your plan be? That's the question I'm asking buyers right now. Do you normally travel at 100 miles an hour down a crowded interstate? Yes or no? It's always an interesting risk barometer for people. I think a seatbelt and airbags would probably be a good prerequisite before you embarked on that journey. And the reason that I use that as a descriptor is because it's a lot of volume that's going through the system very, very quickly. That's exactly what we're in right now in the 2021 real estate market. What I'm going to talk mostly about right now is speed, but I'm going to start with price because it's an important component of it. This is the sales activity for the last 90 days for homes under 250,000. Yes, there were only 85 sales, less than 1 unit a day for homes less than 250,000. There were 1,200 units in February, March, and April of 2018, the same 90-day period 3 years ago. 1,200 units closed in the same time period. Prices moved up in the Pikes Peak region. The activity that we would normally associate less than $300,000 is what we're seeing right now at 500 to a million in the terms of the speed that things are going through. There's usually half a month to a month's worth of inventory for properties that are in this $500,000 to $1 million category right now. That is the nature of the market. Things are moving quickly. To double down on that, the demand is shown when you look at the $1 million properties. Last year, if we were looking at the trailing 12 months at the end of April 30th, there were 98 sales that closed in excess of $1 million. Now, trailing 12 months, 269 units have closed. Colorado Springs has been discovered for the variety of resources that it brings to the table. But again, what we're seeing here is not necessarily unique to Colorado Springs. There's unique attributes, unique markets, unique neighborhoods, unique problems that are happening. But Atlanta's up 25% year over year. Seattle is up. San Francisco is seeing all of their high-end luxury penthouses with views of the Golden Gate Bridge selling again. New York City is selling again. Long Island is very, very strong. Many different markets are happening right now, and it's not just the Colorado Springs marketplace. When we look at where things are year over year, obviously this column right now should have a big asterisk next to it because it was March 27th to April 27th that we were all under stay-at-home orders at the beginning of the pandemic. Despite that, 1,300 homes came for sale in April of 2020. This year, there were quite a few more that came on the market in 2021, but again, put a little asterisk next to it. It was only 1,724. But when people say that there's no inventory out there, I beg to defer. There were 1,700 units that came to the market last year. There's very little sitting inventory. That's the key right now. If it's good, it's probably gone. And when we look at it across the whole marketplace, one of the things realtors like to talk about is months of inventory. And that's measured here. A balanced market is going to be between about 4.5 and 6 months worth of inventory. We're anywhere from 10 to 20 times undersupplied with what we have based on the rate that homes are selling at before we actually get to balance. This afternoon, there's 370 some listings that are for sale, single family in El Paso and Teller County for 750,000 people and 4,300 realtor licensees that work that marketplace. So things are obviously moving very quickly. These are the average number of days on market. And this is kind of an interesting metric right here. This is called price differential. It's the sold price divided by the list price. And it gets even more interesting when you look at it based on different $100,000 bands. So I wanted to figure out what the actual median days on market was, because average days on market is taking the house that sells in 6 hours versus the house that sells six months. Where are half the homes selling? What's that day that sits there? And the answer is usually 3 days or less. I mean, the answer is usually 3 days or less is what we're seeing right there. And this is the price differential that we ended up with if it was selling in 3 days or less. Usually that was even more inflated than this 104.3% that we were seeing market-wide. But further in that, there was a problem that I was starting to experience, which is that there are properties that are getting 10, 20, 40 offers on them. And every day as I look through every listing that comes to the market, because it's what I do, there are properties that are mispriced. Every single day there are properties that I've seen that are coming up. I'm not talking about too high, there are those. There are several houses, given what's going on in the market, that feel like they are priced on 12 months ago data. And when someone gets 18 offers on a property listed for $500,000 and they sell it for $600,000, did they really do a service to their seller to have them consider all 18 of those offers that came in? Versus what if they had 3 really good ones, and could they actually get more money if they priced the house higher to begin with? And that's what I discovered. The answer is yes, you probably can. If you price your house at median days on the market, this is the price differential, which is very inflated right here. These numbers are usually higher than these numbers. But the average price for these houses that sold in the median days on market versus the average price for those that sold longer than the median days on market, these numbers are usually better. And that's because these prices over here started out higher. They may not have had as many offers, but they're still selling for a superior price. And right now, it's 80% of the houses are selling in 7 days or less. We're talking about waiting 3 days, 4 days, 5 days to get the best offer. I mean, another 48 hours worth of inconvenience. You may end up getting more for your house. One of the places that impacts things is on appraisal gaps. Very difficult situation to describe in great detail. But effectively, what most people are looking at is that the house auto-appraised for the asking price, and the buyer's willing to overbid this extreme amount. And if they need to overbid $100,000 off of $500,000, that's a lot of cash that they've got to come up with. What if they only had to come up with $20,000 in cash because the starting price was at $580 where it should have been? That's a scenario right now that a lot of sellers are finding themselves in. They don't know which offer to choose, and in some cases, they're not accepting offers because the appraisal gap is too small, because they started their asking price too low. It's difficult when the market's up 10 to 12% since Thanksgiving to price a property right. And it's why yours truly, as a diagnostic lover of data, am throwing everything at it. I've got the Zillow's estimate. I'm putting odds of sale that are out there. I'm using usual realtor tools like a CMA that sits there and finds out how quickly things are moving in the price differential. I've got this average time to close. On this particular property, we're looking at a house that's getting in close to $600,000. And last year, at the end of December, the highest price in that neighborhood had been $546,000. There's the $60,000 bump since the end of the year. 4 months, 60 grand. This is showing us that opportunistically, we're even heading into a better time of year compared to where things were selling last year. And then lastly, we plotted on a scattergram. And we know that 3 of these sales that we're waiting to see close that are there, they're all gonna close in the next 10 days. So if they can wait 2 or 3 weeks, they're gonna have superior knowledge about where these 3 properties are closing. And boy, don't they wanna know that when they wanna know that information, because the average home in there is selling between 103 and 111% of asking price. So these numbers may be even higher than where they're plotted on there. All of that information is available to individuals if you're willing to go and look for it. All of that information is available if you're willing to go slow in order to go fast. Because before you merge onto that interstate that's moving at 100 miles an hour with rush hour levels of traffic, you might want to know what it is you're merging into. Have a good one.